My investment portfolio is up over 15% so far this year. That's double that of the S&P 500 and 5 times more than the NASDAQ. In this video, I'll cover off the market moving events for March and also discuss the top performing stocks in my portfolio and how I see things heading into April. Hi guys, hope everyone's safe and well. Happy Easter to everyone as well. Just before we start, please remember that the contents of this video are not intended as financial advice. They are my opinions only. So if I just quickly run through the stats so far for the portfolio, it's all green across the board at the moment. It was a bit of a choppy month last month. We finished up just over 2%. And the close of day, Thursday, we were up 1.74% so far in April. So it's taken us to about a 17% gain year to date. I'll jump into a little bit more detail and how that compares to the major indices. So as you can see, return for March, as I mentioned, was 2.31%. The realized profit, so that's closed trades, was 10.67%. So quite a lot of profit taken in March. The year-to-date return, as I mentioned, was just over 15%, so 15.19%. And then if we just quickly compare that to how the S&P 500 and the NASDAQ have done, so you've got the 1 month performance, 3 month performance, year-to-date, and 1 year. So mine was over, if I just tick 1 month there, over 1 month. Mine was 2.31% return. S&P 500 was just over 4%, so beat me in on that occasion. NASDAQ was 1.92%. But as you start stretching over the longer time frames, so the 3 month return for my portfolio was 15.19%. The S&P 500 was 6.45%, and the NASDAQ was 2.93%. And then if we're looking at a year-to-date return, again, mine just over 15%, S&P 500 just over or just under 6%, and the NASDAQ just over 2%. So mine's well outperforming so far both the major indices, the S&P 500 by almost double, and the NASDAQ by almost 5 times as much. And then if you look at the last 12 months, so my portfolio has returned over 81%. S&P 500 is just over 60%, and the NASDAQ is just over or just under 80%. So still outperforming both the major indices over a longer period. And that's with a diversified portfolio as well. So that's not just, riding on the coattails of the NASDAQ doing well. That's with a complete diversified portfolio. I'll quickly cover off the top performers for the month of March. So these are realized profits. These are trades that have been closed. So QFin, the Chinese fintech company, gave us 150% return on one trade. There was another trade actually that I opened, which I closed, was 120%, and that was also in QFin. Aston Martin gave us an 83% return on one trade. Tencent Music Entertainment gave us a 77% return. IAG, the aviation company, a 44% return, and Jumia, the African e-commerce company, gave us a 39% return. So that's not all of the stocks. We closed a lot more stocks than that in March, but these were the top performing ones for the month. So there was an awful lot of volatility in March, more so than there probably was in February. And some of the key sort of market moving events really, or the fears that were creeping in, were around a few key areas. So I'll just quickly run through those. So one of them, which continued on from February, was inflation fears. So as I've touched on in a couple of videos, the Fed has stated that they're not intending to change interest rates until 2023 at the earliest. The market thinks that a rate hike is going to need to happen before then. Otherwise, inflation could creep up. So that impacts on growth stocks, as I've mentioned in a couple of videos previously. So that was one of the reasons why you sort of saw a lot of volatility in the NASDAQ and in a lot of the growth stocks, the ones that have done well over the last sort of 12 to 18 months. and other fears were around the vaccine rollout and rising COVID fears. So those two were sort of joint together. So there was problems primarily in Europe around the supply of the vaccine, and question marks over the AstraZeneca vaccine, which have since proven to be null and void. But rising COVID cases in Europe has meant that Germany and France have had to increase their lockdown restrictions or reintroduce lockdown restrictions. So that's had a widespread fear in the markets, which have subsided slightly, but you saw a lot of the recovery stocks as they were that were doing well. So the aviation stocks, the hospitality, some of the energy stocks like oil stocks, they had been doing well and they pulled back significantly. That has now sort of subsided slightly. And then there was towards the end of the month, there was a big sort of, I won't call it a scandal, but there was a huge sell-off in primarily some of the heavy or the well-known Chinese stocks or US listed Chinese stocks. So Baidu, Tencent Music Entertainment, there's a couple of others that basically were heavily impacted by a private or family-run fund called Archegos Capital. They basically got margin called by the funds that lent them or supplied the leveraged money for that fund. So that basically meant that the firm that had these positions open on leverage were losing their positions, or their positions weren't moving in the direction that they were intending them to. So they got margin called and had to liquidate their positions, and these were huge positions. So that was billions of dollars worth of money that got sold out of these stocks as they had to close out of those positions. So I'll cover off in more detail how I managed to sort of take advantage of those situations. But there were opportunities, they were completely overblown. Basically what happened is when the margin call happened, these sort of algos and other sort of institutional investors, hedge funds and whatnot, saw it as an opportunity to jump in on the volatility, and also probably increased general fear around what was happening. No one really knew at the time what was happening, so there was quite a huge sell-offs in some of these stocks. So we did jump into a couple of positions. So these were the main things that sort of caused a lot of volatility in the markets. There was also one thing which I've missed off, which was around the sort of Transparency Act of Chinese stocks that are listed on US exchanges. So there's a new sort of SEC, not an SEC Act, but the SEC are investigating companies and requesting more transparency in Chinese listed, US listed Chinese companies. It's not just Chinese companies, it's tagged as a more broad, any companies outside of the US, but it's pretty much targeting Chinese companies. So there's a lot of fear around, delisting of Chinese companies potentially if they don't sort of adhere to this new Transparency Act and handing over a bit more transparency on their accounts and being audited slightly more heavily. Again, I think this is completely overblown. I think there's a lot of sort of posturing taking place. Joe Biden's nowhere near as sort of aggressive towards China as Trump was. So, I think he's going to be a lot more diplomatic towards it than Trump was. So there's still obviously tensions there. They're two of the biggest world superpowers. So there's always going to be some sort of tension. But I think that the fears and the huge sell-offs around this one sort of bit of news in regards to the Transparency Act is not something I'm really worried about. Obviously, we'll monitor it. And if it does look like it's going to lead to the delisting of some stocks, then we obviously need to take it a lot more seriously. But at the minute, I just see it as an opportunity to pick up more stocks in good companies at a lower price. So when it comes to more sort of positive news, positive specifically for our portfolio, There was a bit of a tailwind for us in the last sort of few days towards the end of, or right on the end of March, beginning of April, in that President Biden unveiled his $2 trillion infrastructure plan. And that gave us a boost in the sense that he's sort of targeting a lot of infrastructure improvements around sustainability, electric vehicles, the sort of green and sustainable stocks, which we do happen to have a fair few of in the portfolio. So, for instance, Sonova, Sunrun, Neo, a lot of these sort of the clean energy companies done well on the back of this. Now, we did actually have another position in Canadian solar, which we took profit on before market close, because obviously this is great news and it's given all of those stocks a boost, but it's still actually got to go through Congress and be passed. So it's one of those ones where I took a little bit of profit because there were some sort of technical showings that looked like people might take profits as well, and that might pull back a little bit further until things become clearer as to, how long this might take, and if it's going to go through and get passed. There'll probably still be a lot of toing and froing on this. So yes, it's good news for the sort of sustainability and green energy and EV stocks, but it's not just going to they're not just going to fly up. I think it's going to be a bit of a bumpy road on potentially getting it passed, or at least passed in the way that it's been sort of documented. So heading into April, so from sort of mid-April, we start to get some more earnings reports. So the way the sort of portfolio is positioned, we're quite heavy on sort of Chinese stocks, as I mentioned or alluded to just a minute ago. We were quite aggressive in that when this Chinese stock sold off because of this whole issue around transparency, or US listed Chinese stocks having to be more transparent. People were worried that they were going to get delisted. So we managed to pick up some really good positions in Baidu, Tencent Music specifically, and then also there was quite a big sell-off in New Oriental Education, which is it's a Chinese online education company. That was a separate news story which caused that sell-off, but we jumped in on that one as well. So don't tend to do that many sort of day trades. I tend to do a lot of my analysis at the end of the week, but I'm always monitoring the markets, and when there's sort of sell-offs like this, you want to be taking these opportunities. So jumped in on these positions, and already we're up 14, 13, 10% on 3 of them. We've done something similar actually when there was a big sell-off because of all the inflation fears. There's a big sell-off in a lot of the growth stocks. So we jumped in on Peloton, Fiverr, Tesla. We only actually held the positions for like 2 weeks, but we made 20 to 30% profits on them. So it's not something I tend to do an awful lot. I do have a bit of a longer term view, but if there's positions that I can take shorter term that are sort of overblown or oversold, especially around areas of support, like a lot of the stocks I've opened were, then I will sort of dip my toe in and use only a small portion of the portfolio to take advantage of those. So with the ones that we've just opened, I will be monitoring them. I'm slightly, this sort of leads me on to my next point about the growth stocks and the NASDAQ in particular. I still feel like, even though we've seen a bit of a rebound, this is the weekly chart, we can see it went down to about 12,500. Even though we're seeing a bit of a rebound, I still feel like we're going to range for a bit. I covered it off in a video probably a month or two ago when I said, we've had this huge run up for the last sort of 12 to 18 months, since March last year, and it feels like we need to have a bit of a consolidation. It could be that there were worries that it would break this support area and drop further, but I just feel like we're going to be ranging for a little while. So, which means that a lot of the tech stocks are going to be quite volatile. So we do still have a few in play, but I think technical analysis is going to play quite a key part over the next sort of month or two. If it does start ranging, we might have to or we might be sort of trimming in and out of positions, still in the same companies that we like fundamentally, but we might be more sort of active than potentially I would normally be. The reason I sort of think it's going to range for a while is, as I mentioned, because it's pushed up quite heavily for a while. Obviously, there's fears around inflation. We know that that's going to impact growth stocks. So I do think, you know, and when you do look historically at the NASDAQ, there are periods like, you know, from here, if we look back in, so this is like beginning of 2015, all the way to sort of middle of 2016, it was just ranging. So you might think that it's moving, you know, quite a lot, and it is, but it's moving in the same position. Even when we look back to sort of 2018, sort of beginning of 2018, it didn't really break out to new highs until middle of 2019. So that's a year of just sort of bouncing around. Okay, granted, it made a bit of a low there, but it still bounced back into this sort of consolidation pattern. When you compare that to the last year, where it's gone all the way from sort of 7,000 odd right up to new highs around 13,000, we're due a bit of consolidation. So that's where I think we're going to be heading. I think, you know, it could be that we push back up to around about, where are we, sort of just under 14,000, and then fall back again. But I just think with all of the concerns around inflation, a lot of people paying more attention to recovery stocks, so taking profits on the growth stocks, I just feel like we could be in for a bit of a sort of a choppy consolidating period. So, you know, I'll position myself accordingly. We've got quite a good exposure to a mixed bag of investments. Like I said, we've got some tech stocks, we've got some recovery stocks, we've got some financial services stocks, we've got some green energy stocks. So we're quite well covered. But we will look to sort of nip in and out of positions in companies we like fundamentally, if we do see this start to range. So that's one thing I will be keeping my eye on. And then just finally, to cover off the positions that I've opened for the week. I'm not going to do the technical analysis this time, but I can do, you know, I've done them in a lot of my videos previously. I can go through those if you wanted to, or just, you know, just give me a shout out in the comments, and I'll be happy to go through the technical analysis on that. But a few positions I've opened this week. So we've got Kirkland Lake Gold, which is a precious metals mining company. Ormat Technologies, Valero Energy, so that's sort of the non-renewables energy sector. CRM, this position that we sort of have dived in and out of. Again, fundamentally love the company, use it from a professional standpoint, so I know it quite well. But from a technical aspect, it's just bounced off of a key support area, so we jumped in on a position on that. PDD, again, a Chinese stock, we've opened a position in. And then, as I sort of mentioned earlier, Canadian Solar, we closed out a position in that, just sort of lowered our exposure slightly to some of the green stocks, just because I think we might be in for a bit of a choppy period with those. And then two positions in the UK, so Aviva Group and Lancashire Holdings, the two financial services companies. We've opened two positions in those. So a few positions open this week. Really happy with how the month's gone, considering it was a really volatile, especially comparable to the major indices. I've also, when I checked on the most copied traders on Etoro, when I say the most copied, that is this sort of section here. So this doesn't include people like Jay, Nemesis, Wesley Holt. This is just the filter that comes up as the default on the copy page. So when I check the top 10, these people, I've outperformed all 10 for the month in what was quite difficult trading conditions. So I was really pleased with that. So hopefully that will continue. Again, my target for the year is 20%. We're already at 17%. So hopefully we can continue in the same fashion. If you did want to copy my trades, you can do so by going to my Etoro page. There's a link in the description. If you hit the copy button and then select copy open trades, and you'll be mimicking my exact trading movements in your own portfolio. Excuse me. Also, if you wanted to follow my news and analysis, my thoughts on the market, then you can subscribe to my YouTube channel. If there's anything that you wanted to know, if there's any feedback you wanted to give me, then please leave a comment in the section, in my YouTube section.